Hello everyone, welcome to the new video. And in this video we're going to look at why precious metals are falling in the time of war. Like, it's everything that people have been talking about. It's completely opposite is what is unfolding. Like, in times of war, in times of distress, in times of global instability, people are usually betting that gold and silver is supposed to rise up, right? In times of instability, like stability is inversely proportional to gold and silver prices, safe haven assets, right? But there are two other culprits in this. I'll show you. It's basically to understand why gold and silver is behaving in such a way. It's actually not that complicated. I'll try to explain it and I'll make it really easy for you. See, one player is crude oil, right? Other is the dollar. Like, every time this doesn't happen, crude oil does not influence the price of gold and silver, because the last few months gold and silver have been performing phenomenally well, and it had nothing to do with crude oil. It wasn't because crude oil prices were falling, right? It was because gold and silver, they had a nice run because of market participation and people betting on industrial growth and everything like that. But why in this case? So when the world goes through war, there are actually two parts of the world. One part of the world has oil, right? These are the countries now which produce oil. Those part of the world, like mostly the Middle East, if you want, Middle East, even Russia, the USA, Venezuela. These are the few countries that have oil. There are other countries with oil, but these are the major players. The Middle East accounts for more than, like, I don't know, the major chunk of production, right? And then there are worlds where those countries have no oil. Like, war in those countries doesn't impact the oil prices, right? So this part of the world, this doesn't hold true. But for this part of the world, this logic is what works. Now you see, this is the Strait of Hormuz, right? The one that is in talks. So people, the Iranians, they are saying that this place is off limits for ships that has something to do with US and Israel. They are letting some few ships pass, but it's affecting because there are missile attacks on oil facilities, energy facilities. Iran attacks facilities in Qatar, UAE, Saudi, everywhere, Oman. So Bahrain is over here. So what happens is, when this strait accounts for 20% of oil production, like oil passes through it, whether it's Saudi Arabia, whether it's Kuwait, whether it's Iraq, whether it's Iran, whether it's Qatar, whether it's UAE, their oil, they are loaded into ships over these areas and they pass through here, right? They pass through here. Now when there's a blockade, it means 1/5 of the oil is not coming to the markets, or it is off the market. So what happens? Crude oil prices increase. Classic supply and demand problem, right? Supply and demand problem. If the supply goes down, the demand goes up. So the crude oil prices increase. Now what does it have to do with gold and silver? Because when crude oil prices increase, crude oil is sold in dollars, like not by Russia, not by Iran, but by all other major petrol economies, like oil economies like Saudi Arabia, UAE, Oman. Everyone sells in dollars. So when the crude oil prices go up, countries, they buy oil in dollars, so they rush to buy more dollar, or the power of the dollar increases, the demand for the dollar increases, like they need more dollars to buy more to buy oil, the same amount of oil, so they need more dollars, so the demand for dollar goes up. And supply, it's a real joke, but the demand goes up, hence, and everyone assumes supply stays as it is, so the dollar index grows, which is happening for the past US dollar index has been growing. As you can see, this is the 1 month chart. If you can go to a little more, if you can go for 3 months, you see 6 months, you see dollar index has crossed the 100 mark, right? The 100 mark. So what happens when the dollar price increases? People assume the demand for dollar has increased. So it actually makes a case for US bonds to be sold at a higher price or maintain the same price without any rate cuts. That is the first reason. Because of dollar and crude oil prices, gold and silver prices are taking a hit. Countries, they will liquidate their positions. It's a luxury metal. It doesn't like gold and some amount of silver. They have it as safety assets. So they are going to liquefy it if they need more dollars to buy more oil, because they cannot live without oil. Gold and silver they can do without, but this does not happen. Without oil there is no economy. You don't have gold and silver, you don't have dollars, you don't have people eating. That's the case. Now there are two other cases for this. The first one that we mentioned was crude oil up, dollar up, right? And then the second region is the margin calls. Now what is a margin call? Like you see people who trade in stock markets, they have options, right? They call or put, like they bet whether the stock from here, point A, is gonna go up or it's gonna go down, right? So they're betting on that. Derivative market, in the derivative market you don't have to pay the full price. You don't have to buy the stock at A and then hope it falls down or it goes up. You, for $100 stock, you can pay just $5 and wait for it to happen. If it doesn't happen, you lose $5. If it does happen, you liquefy the positions and book your profits. That's a margin call. Now, because the stock market has been behaving like crazy, it's going up and down, so it's gone more volatile. Like it's not predictable. It goes up, it goes down, it goes up, it goes down, and no one knows the future is becoming more and more uncertain, right? So because of that, the margin calls increase. Now this option, when you're betting for it to go down and it goes a lot up, right? So the person you got the option from, he's gonna say, see, look, we agreed on a price for $5 because it was at $100. Now it has gone up to $120. I don't think your $5 is good enough. You need to put in more money or you have to get out of the position. And these people, they are not sitting they are not sitting on a hell lot of cash. So what they do, they book profits. Now what has gone up in the recent months by a lot? It's gold and silver. So they book their profits from gold and silver. They put that money into these margin calls, and because of that they have to sell a lot of gold and silver. Like institutional buyers, they have a huge amount of margin calls, so they sell in that amount. So this margin calls issue is what is triggering a sell-off in gold and silver as well. Now the third reason is actually not the most dominant one, but it's one that is actually something that is going to affect in the long term. The industry demand. See, silver, it's mostly targeted at silver. Now silver is an industry metal used in a lot of industry, but industry use more oil than they use silver. So if oil prices keep on increasing, like $100 per barrel is very expensive, 150 is super hard for them to buy, and $200, it's simply makes sense to shut the factory, because you cannot just keep like ramping up the prices, right, of a final product. So this thing, if the industry slows down because of oil conflict drags on, if it drags on for a lot of time, then this issue can actually change the long-term dynamics of silver. Okay, not the margin calls thing, not the crude oil prices and the dollar prices rising, because this is not sustainable, because it's already falling since the past day. The dollar index, it's going to stay near 100, and after this war there is going to be a decisive figure attached to this. We cannot say something about that. Now, does it change the long-term implications of gold and silver? Certainly not. Now, people have that habit of looking at past charts and predicting the future, but this is what is going to happen. Like how it's going to happen, I'm not going to like try and guess what is going to happen. How it's going to happen, I'm gonna take a guess at that. Now see, this margin calls issue is probably not probably actually due to market volatility. Now if stock markets start going up and all, and obviously people who book profits, they transfer it back to the safe haven assets if the market performs in a steady manner, or they book a hell lot of profit because of the volatility, it transfers back over there as well. Now if the crude oil prices, they stabilize, we're back to the industrial metal going up because of industrial boom. Now if after the war the dollar falls because US has taken a lot of hit, and there are certain conditions, there are other countries, even Iran is trying to sell oil in yuan. Now if oil is available not just in dollars but also in yuan, it's not a symbol of yuan, right? We'll do yuan, we'll write it in yuan. So obviously this dollar index will be delinked from that of oil. So oil will depend on dollar and yuan in both the way. It will work both ways. So rising dollar does not necessarily hamper the crude oil prices. Like rising crude oil prices don't hamper the rising dollar, and the crude oil prices will not be controlled by yuan completely as well. So there will be two countries having their fair share of dominance. So when this happens, then because of the decrease in dollar's dominance, gold and silver is going to rise again, because it's simply not a very decisive factor anymore. If it's sold in yuan too, so when dollar becomes expensive, it doesn't matter if the demand for dollar grows or the demand for yuan is also going to grow. So this was the case. I hope you understood why gold and silver prices are falling, and how you can have a good guess if you look at all these facts, like what is going to happen if you the market volatility persists, if the oil crisis elongates and it drags on, and if the industry is comfortable with the oil prices and all. It depends on all of these factors. So mostly this sell-off was because people rushed to sell gold and silver, whether they're trying to book profits, whether they were trying to get more dollars, countries were trying to get more dollars, or people simply looking at the prices falling and then panicking and selling. It happens, it's normal. What happens when so if you don't have urgent need of cash, you should stick to have them invested in wherever they are, even in stocks, even in gold and silver. Don't trade in a panic mode. Don't trade when you are not in a comfortable position, when you don't actually need that money. You don't need to play with it. You simply wait for this to pan out completely. If you have your reasons, obviously go ahead. It's your money, and I don't do financial advice on this channel. I simply look at geopolitics and try to figure something out of it. So I hope you had a very intuitive and informative video. We'll come back in the next video and we'll talk more about this. Thank you.